Happy Monday, traders, and welcome to a fresh week in markets. Since the Fed cut rates last week, the bull market risk-on trading has continued, and especially for US equities. So Nasdaq and S&P on Friday, again, new record highs, closed at new record highs, and continuing to trade exceptionally well. Nasdaq last week, it rallied from 24,000 and closed the week above 24,600. So I put on, 600 plus points last week. So look, I would suggest not trying to pick a top with these equity markets. Certainly that is not working. We're still obviously in a raging bull market. So being long obviously is paying, and it is the best way to trade these equities at the moment. Look, these equities obviously they need to be scared of something, to potentially top or go lower. And at the moment they're just not scared of anything. US equities obviously have looking at more Fed rate cuts before the end of the year and next year, and equities love nothing more than rate cuts. So moving on, one market that is a little bit interesting at the moment is the US bond market. US bond yields, especially long-end bond yields, in September have traded a lot lower going into the actual Fed meeting. We did see US 10-year yields actually break 4%, even if it was just temporary. But since the Fed meeting, bond yields have actually traded back higher. So we've got US 10-year yields, they closed on Friday around 4.13%. So they're up about 13 basis points from when the Fed cut. And 30-year yields went from a low of around 4.6 all the way up now to closing on Friday at 4.75, so up about 15 basis points. So look, they're not huge moves, but the point is that they are going back up. So certainly worth watching what's going on with those bond yields. One market that certainly does watch those bond yields and actually does trade on the back of what US bond yields are doing is the US dollar. And actually ever since the Fed cut rates, the dollar, just like bond yields, the US dollar has rallied. And we've actually seen quite a meaningful rally in the US dollar. The euro, which was on its way to 120, it's got rejected at 120. It's all the way back down to just sub 117 and a half. Dollar yen's rallied up a couple hundred points from lows of 146 back to 148. It's only two big figures away from 150. Can you believe it? And Aussie as well, which had a fantastic run, which was on top of the G7 leaderboard in September, up at 67 cents, and that smashed back down to sub 66 cents. So look, we've seen traders going back into the US dollar since the Fed meeting. Having said that though, I would imagine we are coming into probably an area maybe that you want to be fading this move. Euro, for example, low 117s and just below 117 is going to have some rock solid support. We've heard from the ECB, these guys are not cutting rates anymore. They've finished their easing cycle, and we've still got a lot of Fed rate cuts. So at some stage, imagine that trade is going to work again, and we will have that run up to 120. And the Aussie too. Look, it is a risk currency. When you have risk doing what it is doing, certainly that is supportive of the Aussie. So I can't see a big sell-off in the Aussie. Anywhere down towards 65 and a half, I'd imagine there's going to be some rock solid support down towards those levels. So bias, I think, is trying to pick up some cheap Aussie if we get down there. Now, precious metals, they continue to trade exceptionally bullish. Last week we did have new record highs for gold at 3,700 when the Fed cut rates, had a decent retracement before on Friday, gold rocketed all the way back up to 3680 plus. Had a record weekly close, so obviously that's bullish. And silver too, closed above $43. They're new 14-year highs. So look, precious metals, just like equities, are doing exceptionally well, loving the rate cuts. So yes, buying and dips in those precious metals, and you have had a few opportunities for retracements and dips. And I would suggest that if you get those again, certainly that's probably the way forward. Silver traders, no doubt, are looking for $45 targets in the short term. But further out, look, they are still well and truly bulled up for $50 at some stage. So, at $43, still got a long way to go. Could be a fantastic trade. Anyway, look, this week is not the hugest week for economic data, but there is obviously every week something coming out. This week on Wednesday, we do have the monthly CPI data for Australia. That's going to be closely watched for the simple reason the last inflation number had a big spike up from low 2% to 2.1 all the way back up to 2.8. Not good. So let's see what this one does, but certainly the RBA would not be wanting to see that monthly inflation go back above 3%, and that's their mandates between 2 and 3%. So that might have the market start questioning about any more RBA rate cuts. And obviously that'll be supportive for the Aussie as well. So Wednesday is certainly going to be an important day for Aussie markets. Thursday, there is a Swiss National Bank meeting. The Swiss National Bank has the lowest policy rate globally of 0%. There was speculation maybe that at some stage these guys might go negative again. But the Swiss National Bank has poured cold water on that. And they said that it would be a high bar for them to go negative. So don't expect any rate cut at this meeting, that's for sure. And then on Friday, we do have some important data out of the US, and that's the monthly US PCE data, Fed's preferred inflation gauge. Now that is moving back up towards 3%. Again, it's moving in the wrong direction, just like Aussie CPIs, not good. But we learned from the Fed last week that at the moment, they are giving more attention on their dual mandate to full employment than they are to inflation. So I'm not sure whether or not if we do see that PCE marginally go up, it's going to make much of a difference. But if obviously we do get something that comes out well above expectations, that may actually start getting the market questioning just how aggressively the Fed may need to cut. So Friday is going to be probably the most important day for economic data this week. Anyway, good luck to start the week with your trades, and we'll catch back in with you shortly.